All right, so gold and silver prices are taking a little bit of a breather today. And I want to talk a little bit about why we're starting to see some price reduction overall with gold and silver, and why it's not that big of a deal, in my view, for the future. But first, let's take a look at what Bank of America had to say with its weekly flow indicator. In this first paragraph here on Kidco News, investors moved $31.5 billion into equities while taking $1.8 billion out of gold and $15.4 billion out of bonds, according to the Bank of America Flow Show. So at least gold was not impacted as much as bonds, but in relative terms, it could be challenged. Now, obviously, we did see a sell-off with bonds, particularly last month, as we saw a huge surge going into equities. Now, there's a reason why all of that was happening. We talked about that a lot in a couple of episodes prior where it came to rising volatility. And that rising volatility meant that those who are likely institutional investors taking advantage of this needed to have some extra cash, raise some cash in order for them to seize upon these opportunities of shorter term trades that would result them in higher gains. Now that that volatility has somewhat dissipated, it behooves them to go back into more of a less of a short-term approach to more of a longer-term approach. And that's why we're starting to see less of that sell-off affect gold and silver, and other assets as well. But as far as silver is concerned, we can take a look at SLV over the last month. You can see, obviously, there's some selling here, selling volume here, selling volume here. You can take a look at GLD. There's some selling volume here. And if you also take a look at the U.S. Consumer Price Index, there was a rise of 0.4% in February, as expected. But you can also see that there was some tepid, sluggish inflation in particular sectors. But the reason why this isn't that big of a deal is if you take a look at some of the ISM data that we got in February, what we will be expecting in the future is obviously seeing those rising prices impacting those purchasing managers reflect itself within the economy. Now, once we start to see that, and we start to see that reflected within the CPI, we start to see that reported in the news, again, months from now, we will then start to see a bit more attention on these assets that are sensitive to inflation. Now, probably in some episodes about a month or so ago, I spoke about how, gold will likely not perform as well as silver this year, because silver just has a lot more going for it industrially within the economy with industrial demand. But I did mention that towards the back end of this year, possibly going into the beginning of 2023, we should start to see CPI rise a bit more, and that will be favorable for gold. But until then, when you start to see things like bonds selling off, you start to see nominal rates for the 10-year rise while inflation is still muted, you're going to see real rates begin to rise, which is not a boon for gold and even for silver. And again, all these other assets that are sensitive to inflation. So guys, let me know what you think about gold and silver's price movements today, your outlook for it in the future in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.